welcome back to another episode of Real Estate 4-in-1. We are with Chad again today with Prime Lending, and we're going to talk about the conventional loans. So what exactly is a conventional loan?
A conventional loan is really kind of geared around folks who, well, it's not a government-backed loan, and it is geared around folks who, in my opinion, are a little bit higher on the credit score level.
Okay.
Conventional loans are 100% credit score driven. So you'll see, when you're looking at options and laying out or presenting different variations to the conventional financing, you're going to be looking at all aspects in terms of credit scoring and obviously down payment.
Perfect. So as far as minimum credit score goes, who qualifies best for a conventional loan?
Well, conventional loans will run, 15-year fixed conventional mortgages really aren't credit driven, but they do require a minimum credit score of say 620.
Okay.
The 30-year loans are all credit driven. So if your interest rate is based on credit scoring, and so is your monthly mortgage insurance if you're not putting 20% down, is based on your actual credit score. So those two things can actually really determine how your financing goes.
Where it goes. Okay. Now, minimum down payment for a conventional loan, what are they looking at?
You can go as low as 3% down, 5% down, 15%, and you go up to 20% down.
Okay.
And then that 20% down will get you the variation of no mortgage insurance monthly, which a lot of folks like to do or think they have to do, but they really do not need to do that.
Right. So that'll roll right into my next question. PMI on a conventional loan, is that standard, not standard? How does that kind of work?
It's very standard. If you're not putting 20% down, you're going to have monthly mortgage insurance. It's the less money you put down, the higher risk you become in the eyes of the lending institutions or the guidelines. They're going to require a different factor for your monthly mortgage insurances. So if you have high credit scores, you can go 3% down, 5% down, and you'll have your monthly mortgage insurance. But it's not going to be as great as if you have a lower credit score.
Right.
And you can also, there are some variations into the financing side of things if you want to prepay the mortgage insurance.
Which is a nice factor, which you cannot do with FHA, could you?
That is correct. FHA, the mortgage insurance will remain for the life.
For the life of it, and it's into
correct.
your loan, basically, your monthly
it's
payment.
financed.
Right. As far as, and I know we touched on this a little bit in our first video. I'm going to go a little rogue on you. On our first video, if you are not set up maybe in the best stance to do a conventional loan now, but you are in, say, 3 months or 6 months, you give that roadmap, right?
Correct. I mean, I'm going to look at the financial DNA of every client and determine, what kind of, I look at it as a 5-year plan. What's going to be the best financial option in the next 3 months, 6 months, 1 year, and out to 5. And
so you're looking past that 24-hour mark when you submit that application.
That is correct. We want to look at all the broad picture of everything that's available to the person who's looking at the financing.
Which I respect that with you, that you're not just going to slam somebody into a loan if it's not right for them.
That's correct. I mean, we oftentimes do the credit scoring and we can help assist with the increasing credit scores to actually gain them a better loan product.
Right. Is there anything else, I know we can't cover everything on conventional loans, but is there anything else that you think that's super important right now?
The important piece of it is to definitely have your finances checked, look at them, have your credit score looked at by a lender, and make sure you've got your options, because there are some really, really slick ways to help or modify someone who applies online and just thinks that their credit score is maybe a 650, but they could pay down a small debt and get up to a 680, which is going to be huge for monthly mortgage insurance and interest rate. So those types of things you got to look at. That's what I would say. Make sure you do your due diligence.
Right, due diligence. So that's going to handle us today on the conventional loans. Next week we're going to talk about VA loans. So Chad, if they want to get a hold of you, how would they do so?
Give me a call on my cell phone at 509-539-8043.
Perfect. And then if you guys have any real estate questions, I am more than happy to help you in that field. And you can reach me at 509-947-2615. So until next week, we look forward to seeing you. Bye.